Lesson 12. The 5 major US fundamentals. Now, by the end of this section, you will understand what the 5 major US fundamental indicators are. You will understand how GDP affects a country's currency. You will also understand the importance of balance of trade in Forex, and you will learn about the importance of the Philly Fed index. So these are the 5 major US fundamental indicators. We have gross domestic product, which is GDP. We have non-farm payrolls, which is also referred to as NFP. We have balance of trade. We have Treasury International Capital Survey, also referred to as TICS, and we have the Philly Fed Survey. Now, each of those 5 indicators, when combined together, can give you a pretty good estimation of the state of the US economy, and as a result, help us to identify the future direction of the US dollar. We use a combined approach, so we combine all those 5 indicators and we look at the overall fundamental picture. So if most of those indicators are showing positive results, then this is indicating that the US economy is doing well. So we don't just look on one of the indicators, we look on the overall combination of those indicators to give us an estimation of how the US economy is performing. Now, always remember that interest rates are the primary driver of market sentiment. Now, all the other economic data that is disclosed is used as an indicator to assess the likelihood of the central bank raising or lowering interest rate. So remember, always focus on interest rates. That's the main focus here. Because whenever a country raises interest rates, the demand for that country's currency increases. And this is because a lot of investors prefer to invest in countries with higher interest rates. So in the next lecture, we'll be looking at gross domestic product.